Welcome to Browsingtechzone YouTube channel, and in today's video I'm going to show you in details how to start trading cryptocurrency on Binance. So as I've promised in our previous video, so if you haven't watched our previous video on how Binance application works, simply navigate to our previous video right now and watch the video, as this video is going to be a continuation to our previous video. So in the previous video I've shown you some basic information on how to use this Binance application. As you can see on my screen right here, I'll be using Binance application today to take you on today trading classes, and as it has reflected in the title of this video, so this guide is for beginners. So if you're just getting started with cryptocurrency trading, so this video is going to be able to guide you on what you need to know to be able to trade cryptocurrency and make profit, how to get started with crypto trading, and how to know your way, navigate your way around crypto market, all the factors you should consider before entering the market, and the right time for you to leave a market when you are trading. So those are the things I'm going to be showing you right in this video. So if you haven't watched our previous video and you don't have any knowledge on how this Binance application works, I will recommend you to go and watch the video right now before you start watching this one, as this is going to be the continuation for the previous one. In the previous one, we've shown you how to buy cryptocurrency, how to sell, how to copy your crypto wallet address, and etc like that. So for today we're going to go straight to trading and how to trade on Binance. That's it. So you're welcome to this guide, but before I proceed with the main guide, if you haven't subscribed to this channel, make sure you do that right now. Subscribe to this channel, turn on the notification bell, so that whenever we drop a new video guide, you will get notified that we drop a new video guide. Thank you. So you are welcome back. So when you want to start trading cryptocurrency on Binance, so all you have to do is to open your cryptocurrency, all you have to do is to open your Binance platform, then go to market. Now on getting to market, there are some things you should take note of. So okay, let's say before you start trading, you should have found your wallet with USDT or BUSD. So you can either trade with USDT or BUSD. You can also trade altcoins. You can also trade stablecoin with altcoins and vice versa. So but as a beginner, you should stick with the use of BUSD or USDT. So before you start trading, if you want to trade, make sure you deposit something on your Binance. Let's say I navigate to my wallet right here. If I should go to my wallet right here, let's say, can you see? So I'm having $100 on my account right here, and this $100 is on spot wallet. If I should click on spot right now, you will see spot. Can you see? So this is spot. Can you see the USDT here? I'm having 75 USDT BTC worth of $25. So this 75 USDT is what I will be able to use to buy when I enter the market. So I think you understand what I'm talking about. So the first step is to deposit on your spot wallet. In the previous video, I've shown you how to switch from funding to spot, so I shouldn't be going through that right now. So after making sure that you fund your wallet, all you have to do is to go to market. So on getting to market, so it's either you select BUSD, you select USDT. So if you have maybe you've moved deeper to in crypto trading, you cannot be using BNB, BTC, ALTs, and fiat. So but for now, you either use BUSD or USDT. So let's say I'm having USDT right now. So as I've selected USDT right now, so I will be trading all cryptocurrency in this market against USDT. So when I want to buy cryptocurrency right now, I will buy with USDT, and then when I want to sell, I will sell with USDT. So it's simple logic. Right now I will be converting USDT to BTC, then from BTC to USD. That's if I've decided to trade BTC as cryptocurrency. So that is the number one step. So when you want to trade, you go to market, select any cryptocurrency that you want to trade. So after which you've selected, let's say I want to trade Silica. So let's say I select Silica. So this, I will be taken to this page. So on getting to this page, let's say I want to buy. Let's say trading, when we get started with trading, what you should understand by trading is trading as all trading you've known before. So the only definition for trading is buying and selling. So it's not different in cryptocurrency. When you are trading cryptocurrency, it simply means you are buying cryptocurrency and you are selling cryptocurrency for profit. Let's say it's as simple as, let's say you what can I use as an example? Let's say you buy rice. Right now you buy rice when rice is selling at 500 naira per liter. So what's the measurement for rice? So then let's say it increased in a week time, and they are now selling a congo of rice for 700 naira. So you can now sell at this time and accumulate the profit of 200 naira per congo. So it's as simple as that. So cryptocurrency trading is also buying and selling. So you buy when the market is low and you sell when the market is high. So when this coin are dipping, when you say these coins are on their low, then you buy. When they pump, then you sell them again. So that's the layman definition for trading. So let's say I want to buy SEAL right now. So I will just enter the SEAL market and click on buy. So immediately I click on buy, then I'll be taken to this page. So there are different orders here, and we are coming back to this place. I'm going to explain everything to you right here. So right now, let's say you want to sell, you click on sell, and you will sell whatever you want to sell. So that is number one that you should take note when you want to trade. You buy and sell. But how did you know the main coin that you want to buy or sell? You can't just enter market and buy any coin. You can't just let's say you have $100 or you have $1,000, you have $2,000. You can't just enter the market with your $2,000 and buy just any ordinary coin or any coin that you see in the market. You can't just check. So there are some factors that you should consider when you want to buy a coin or you want to sell a coin in the crypto market. So this consideration is what brought us to technical trading. So technical analysis. So if you want to trade cryptocurrency, you have to understand technical analysis very well. So when you want to understand technical analysis, that is when you will know the coin that you should enter. Number one of the factor that you should consider when you want to enter a cryptocurrency is the last all-time low of the coin and the last all-time high of the coin. So when you want to enter a cryptocurrency, let's say you are let's say I'm scrolling this page right now, all these coins that are showing plus 47%, plus 4%, plus 9%, I don't think I have any business with them. If I want to enter market, I don't have business with all these ones that are showing green. I don't have business with them because they are on their bull run already. You don't join a moving train, like a moving trend as a beginner. You don't join that when you want to trade cryptocurrency. You will look for a coin that is not on a, let's say it's on bearish, the market is bearish at that present moment, and there is a possibility of the coin going up very soon. That's the type of coin you will click and buy. So how did you decide when a coin is on bearish moment or bullish moment that you should be able to buy it, or the time so the number one thing you should know when you want to trade cryptocurrency is the right time to enter a market, the right market you should enter, and the right time to leave the market. So that's the 3 points that you should consider, and all these 3 points can only be determined when you understand technical analysis. Right in this video, I will not be able to take you in full dimension what's contained in technical analysis, but I will be able to at least give you a brief overview so that when you want to do additional research and further research so as to understand technical analysis better, you will know the area you're supposed to cover and what you're supposed to do about technical trading. So let's say I want to watch. Okay, so I've given you first clue that when you want to enter a market, don't enter a market on bullish run. If a market has started its bullish run, then you leave it. When it's bearish, then you can buy. When it's bullish, you leave it. When it's bearish, you can buy. But it's not every bearish movement you can join, and it's not every bullish movement you can run from. If you study technical analysis to some point, you'll be able to join bullish movement, and you'll be able to make some profit from it. But as a beginner, you should stay away from joining a bearish movement in a cryptocurrency market. So okay, let's say I want to trade wing right now. Can you see this wing is in bearish movement already? This is minus 27%. So this is wing. Then I will click it. So when I clicked this button, all these buttons that are displaying here, this is what you can use for your technical analysis. We have candle pattern, we have Bollinger Band, we have volume, we have MACDC, we have RSI, and ETC, like that. When you go deeper into technical analysis, you will understand everything that I've said right now. So now when you want to decide in technical analysis, when you want to trade, you want to enter market in technical analysis, there are another factors that you should consider. Let's say you want to trade we have daily trader, we have hourly trader, we have weekly trader, we have monthly trader. So this hourly trader, they are these people, what's this term that we usually use for hourly trader? They are like this thing have escaped my mind. I'm very sorry for that, but I may remember very soon. So when you want to trade hourly, that means you just scrap some coins out and decide if this is going to at least give you some profit in the next 1 hour. So the only distance between your buying and selling is just an hour. So all these decisions, you will study the market and understand what is going to happen next, and in the next 1 hour you should have calculated your point. Let's say you bought 1 Tron at the rate of 0.073 USDT. So you should have at least be able to calculate if this Tron will be able to move from 0.073 to 0.074 in the next 60 minutes. So when that 60 minutes completed, then you will be able to bag some profit and you will exit the market. So that's for hourly trader. For weekly trader, you will use a week. Can you see? For daily trader, it's just for a day. So let's say you've did all your technical analysis, you study all the candle pattern, you check the volume. So the volume is what will show you the rate at which people are buying and selling in the market. So if you've checked everything and you see this market should be in this position within 24 hours, then you will be able to know to now decide the entry point. So if you want to check if you want to switch between duration of a trade, it's either you use an hour. This is an hour. This is where you will switch. So if you want to buy, if you're an hourly trader, so this is what you will select. It's either you select an hour, or you select 4 hours, or you select a day. So if you're selecting daily, which is 24 hours, you will click on this 1D. So when you select 1D, you will notice that their candle pattern, they are different to each other. So let's say you want to go further, then you can click on more. This is where you will be able to select 3 days, 1 week, or 1 month. I hope you understand what I'm talking about right now. So if I should select 1 month right here, I will have different candle patterns, and I will be able to analyze the market. So that's about how to select duration for your analysis. This duration I'm talking about, you will use this duration for analysis if you want to buy cryptocurrency and you want to make it up to 7 days before you sell it. Then you are not going to use 1 day to determine your entry point or your exit point. So you are going to use 1 week. So if you know you want to leave the money in the market for 1 month, you are going to use 1 month. Those are the things you must consider when you want to start trading. Those are what you need to know to determine a entry point for any coin. So that is about this. So if you now want to determine the movement, if it is bearish, if it is bullish, or if it's going to be bearish anytime soon, that is when you will now take a look at all this Bollinger Band, the volume. this Bollinger Band, they are the trend. They are. Can you see? So I can, let me say I remove everything here. Let me remove everything and leave only Bollinger Band. So when we're talking about Bollinger Band, this Bollinger Band are the three lines that you are seeing here. If I should remove it now, you won't see the line again. You will see only candle pattern. There is a way you will study candle pattern. You will know, okay, this candle pattern that you are seeing here, it's telling me something about the market right now. All these red small candles that you are seeing here, they are telling me something about the present market. So if you have read about candle pattern, you should be able to determine what is happening right now in the market. In our next video, I will try as much as possible to compress the candle pattern analysis. Then I will show you how to do candle pattern. But for now, let me brief you on everything you need to know, so that if you want to make your findings, you will be able to get started trading right after watching this video. So moving forward, after which you've determined your candle pattern, you've studied your candle pattern, then you've get some point, maybe you've set a or a trigger or anything for the coin, then you can now take a look at all these Bollinger Band. Can you see all these Bollinger Band? They are what tell you about the present movement in the market. These bands will show you the right time to enter the market or when to leave the market. So this is volume. Volume shows you the rate at which people are buying the coin and at which people are selling. So this is what tells you if people are actually buying aggressively at that moment or they are selling aggressively at that moment. What does this mean? If people are selling aggressively, then you have to follow them sell. Don't buy when people are selling and don't sell when people are buying, or unless if you want to sell when people are buying, make sure you have made enough profit and you take your profit and maybe you want to reinvest the capital, you want to invest everything in another coin. So that is that about volume. So this volume is what we tell you if people are buying. So and you understand what we mean by buying and selling. So if a lot of people are buying at a present moment, then the price of the coin will keep going up, and immediately they start selling. That's when bears take over the market, and the price of the coin will keep dropping, we start dropping respectively. So I think you understand what I'm talking about right here. So MACD, can you see MACD is another let me remove volume and show only MACD. So this is another indication that shows you the right time to enter a market. It will show you the behavior of the market in the past 1 week, 2 days, 3 hours, and etc like that, depending on what you depending on your determination and your pattern of assuming your own technical analysis when you are trading. So the last one I want to show you right here, I've shown you the Bollinger Band. You have to take a look, you have to put all these three lines into consideration in Bollinger Band. In volume, all you have to take note is the rate at which people are buying and selling. That's what you can get from the volume. So let's remove everything in MACD and then let's go to RSI. This RSI is very important at the moment. It's very important. So there are some points in this RSI, and this point on RSI is what will tell you if you are safe to enter a market or not. So this RSI, it's range from 0 to 100. So anytime you enter market, it shows. Can you see? If I should hold it right now and move this cursor, look at these readings here. You are seeing 41, 52, 47, and etc. as I'm moving this cursor. Can you see? So the lower the value of this RSI, the safer it is for you to enter the market at that present moment, and the higher the value of this RSI, the riskier it becomes for you to enter the market at that present moment. I hope you know what I'm talking about right now. When the value of this RSI is very low, that means the coin is about to reach its all-time low, and it's about to bounce back. I hope you understand what I'm talking about. All these coin, they have their lower low, that whenever they reach this, or else there is another any manipulation or any crisis in the market that cause them to drop beyond this boundary. So immediately they reach this point, they must move up, they must bounce up again. So that's what you can use this RSI to determine. So as you can see right here, this is can you see? So this is an example, 95. You won't want to buy at 95. If you should buy this coin at this present moment, then you're going to lose. So it's very certain that you're going to lose if you buy this coin at this present moment, or else, unless you are an expert and you've understand the market. But there's no way you want to understand the market. Let me say, this is 95 already. It's going to 97. Immediately it's around 95, 97. That's the highest. So it's going to drop, and you won't want to enter the market, and the market will dump on you. That will be a massive loss on you. So that is that about technical analysis as far as this cryptocurrency is concerned. So right now I've shown you how to enter market, and the factor you should consider to enter market. When you want to enter market, use volume to know if people are buying or people are selling. This green indication is showing me that a lot of people are buying. A lot of people are buying at that present moment, and that coin is going up. So at this present moment, you should avoid the market. Don't buy this coin. Go and analyze another coin. So immediately it's red. So at this moment, it's for taking profit. Yes, I forgot to mention that. So because I'm just telling you how to enter market, so that's why I'm not talking about taking profit actually. So this moment is for you to sell, not to buy. When that's cryptocurrency rules for you. When others are selling, follow them sell. When they are buying, follow them buy. That's it. If you buy when they are selling, then the market is going to drop on you and you are going to lose your money. So that's it. Unless you will be able to leave the money in the market for a very long period of time. If a market should dump on you and you don't want to incur loss, then you're going to wait for a very long period of time before you can recover from that loss. So that is what you should take note when trading cryptocurrency. So I've shown you two very important factors to consider. These two factors alone are enough for you to discover to determine when the market is safer for you or when it is riskier for you to enter. So once you analyze the volume and you see if people are buying or selling, then you use RSI to let you know if this band has exceed the maximum. So below 50 is still okay for you. You can buy at below 50 of this value and you can sell at above 70. I hope you understand what I'm talking about right now. So but for now, I am just giving you the basic knowledge about these things. You also need to develop further. So if my schedule have it to drop the detailed information for you, then I'm going to drop it for you. So depending on how people turn out and take this video serious, then I'm going to know if I'm going to go deeper in the technical analysis or I'm just going to wait for now, because this one that I'm releasing already is enough for average individuals to at least start trading when you develop more and you get a little more knowledge and add it to these ones, because I'm still going to release another strategy in trading cryptocurrency for beginners after this one. So all you have to do is to keep following us and keep watching every video that we drop. So right now I've shown you how to use the RSI and the volume to determine when to enter the market and when to leave the market. So I said if you're using the RSI, below 50 is good for you to buy, and above 70 is good for you to sell. So when the market is in bullish position, then you can sell. When it's in bearish, you can buy. Hope you get the rules. So that is that about that. But regardless, you shouldn't use these two factors to determine when to enter a market or leave the market unless you are using candlestick with it. So candlestick analysis is very important. So we have different types of candle patterns. So I'm going to explain that later. So after this video, I'm going to release another video explaining the candle patterns for you appropriately. So these candle patterns, they all have their means. We have hammer, we have different patterns, different candle patterns. So these candle patterns are they are the real deal that will show you what is actually happening in the market. So immediately you are able to determine what is happening in the market, then you are going to be able to deduct your stand. You set when to enter the market and when to leave the market. That's your number one assignment. When you open your Binance account, you have money to trade. You've entered the market, you've seen a pair you want to investigate, then take a look at the candlestick pattern, take a look at the RSI, the volume, and other factors that you understand very well. Then after considering all these factors, you can now determine when to enter a coin and then when to leave. Okay, let's say you study a coin named, okay, let's say you study Tron. I'm just using this for example. The price might not be accurate. Let's say you study Tron and the present price for Tron. Okay, let's say you study Wing and the present price for Wing is $30. Can you see? This is $30. This is 24-hour high. This in the last 24 hours, this coin has reached $53.60. And right today, this 24 hours today, the coin has reached low of $28.68. Can you see? So right now, if you can study this coin, that's the reason why I select this coin in the first place. This coin is in bearish moment, so it is dipping. People are selling. The bear are in control of the market at this present moment. So right now, all you have to do is to analyze this market, check this candle patterns, and determine what is going to be the lowest. So at this point is when you are going to set your buying price and selling price. Okay, let's say I've checked the 24-hour high, the 24-hour low. Now, with my technical analysis and all the consideration, assumption, and everything that I've made in the market, I am very sure that this coin is going to drop to $20 before bouncing back. So after making this determination, the decision, the next thing is to go to buy. Immediately I go to buy. Can you see? So immediately I go to buy. I am very sure that this coin will enter $29, right? Oh, I said it will enter $20 before bouncing back. Okay, I will now set the price to $20. So immediately it will reach $20, this order will be filled for me, and I will be having wing on my account. Now, if during the analysis I am very sure that after this coin bounce back from $20, it will reach $25 before dropping again, then I'm going to set my selling order to $25. So by doing this, immediately the coin dropped to $20, the market will be filled for me automatically, and it will buy a wing at the rate of $20. Let's say I place order for 5 wings to be filled for me. So that is $100. So $100 will be deducted from my balance automatically, and I will be having 5 wings on my wallet. So immediately the market starts recovering. Let's say during my analysis I said it's going to recover in 1 week, it's going to recover in 1 day, and etc. like that. So the next thing is for me to keep waiting for when my prediction is going to at least it's going to click. So immediately the coins enter $25, then the market will be filled for me automatically again. The coin will be sold, and I will be having 25, because 5 times 50, 5 times 5, that's $25 return on that $100 investment, maybe for 1 day, 1 week, or 1 month. It depends. So after which you've determined when to enter market like that, the next thing is to monitor the market, to make sure if your prediction is going as predicted, or the market is going against your prediction. You will not be always right in crypto market. You will not be always right. You will not be always right. There are some times that you'll be wrong. There are some times that you'll be right in the crypto market. So that is that about crypto market. That's what you should understand about that. So as a crypto trader, another thing, I've shown you how to enter the market right now. Then the next thing is what do I want to say right now? I want to say something I've forgotten. Okay, stop loss. Let me talk about stop loss. Maybe before I finish talking about the stop loss, I will remember what I want to say before I forgot. So stop loss is risk management. So when you are trading cryptocurrency, as a cryptocurrency, you should take your risk management very serious. Okay, so I will explain to you how to use all these limit buy, sell, and market sell, all these order that are on the market. I will explain everything to you so that you will know how to set everything properly. So, but now let me talk about risk management. If you are trading cryptocurrency as a crypto trader, don't just leave funds in your account, place orders, and go and sleep. No, if you want to trade, if you are not a holder, you will make sure you use risk management. And the one and the most effective way, if we are not talking about fraud control, scam control, and other controls, if we are talking about losing money to the market and recovering money from the market, the main thing that you can use for your risk control is stop loss. Yes, no matter, I don't want to know how much you are good in the technical analysis. This video I've shown you that before you can start trading, if you want to trade with technical analysis, I will still show you how to trade without technical analysis. Yes, I will still show you that. But if you want to trade with technical analysis, you should understand technical analysis very well. And all those points that I've made mention, you should make sure that you get them very well before you start entering market as a trader. So now that you've entered market, make sure you are using stop loss. Stop loss is, let's say, it's like a trailing order. Like, let's say, okay, you predicted this wing to be for it to drop to $20 and never drop beyond $20. Okay, you did your prediction that, okay, this wing is going to drop to $20, but it will never go beyond $20. Okay, what if you are wrong? What if the market did not obey your predictions? There are some rules in cryptocurrency that you have to apply when you are making your prediction. What if the market go against that rules? Yes, you as a trader, as an expert, you've did everything, and at the end of the day, the market did not obey you. What happened? If you did not use stop loss, the money will keep dropping, and that's how you will lose everything. So, but you won't want that to happen. Then you are going to use stop loss. Okay, how to determine where to put your stop loss? Let's say you are expecting the coin to bounce back at $20. Where if it's obey, then you're going to start making profit at 20, 21, 22, etc. like that. Okay, but what if it doesn't happen that way? You will now determine the amount of loss that you can bear. Like, okay, let's say at least if it's dropped beyond $20, the order should have been filled at $20. Then if the market did not obey what you said and it dropped beyond $20, if it dropped to $19, that means you've lost $1 per unit. That's approximately $5 loss. If it's dropped beyond 19 and goes to 18, that means you've lost $2 per unit, and that's approximately $10. Now you determine if you can handle $10 loss or $5 loss. If you can handle $10 loss, then you are going to set the stop loss to $18. Immediately it doesn't stop at $20, it doesn't bounce back, then it dropped further to $19. It doesn't stop at that. It dropped further to 19.5. It doesn't stop at that. It dropped further to 18. Then the market will fill your order for you. And if it dropped further, even if the coin dropped to zero, you're still going to have let's say you lost $10, then you're still going to have $90. So that $90 you can use it to predict another market, and maybe you recover from the loss you incur when you are trading wing. So that is that about how to set a stop loss. So stop loss is very important in crypto market. Immediately you enter a market and your order has been filled, make sure you come back and analyze the market again. Then you put your stop loss to where your energy can cover. So if you know you have the capacity of losing $5, you place it at $5. But when you want to put your stop loss, don't let it move closer to your buying point. You just keep losing. This is why the cryptocurrency market is not stable. It can just bounce back and recover. We have bounce back, so it will just bounce back and keep moving again. Okay, let's say your order has been filled in $20, right? Okay, the coin is not even intending to drop beyond $19. So from that $20 to $19 is just correction, and once that correction has been made, it will keep moving again. But if you are not careful and you don't want to lose anything, you just set your stop loss to just $19 or 19.5. Immediately it drop beyond that 20, you just drop to $19. Immediately it drop to $19, the market will sell your coin for you immediately, and immediately the coin will start going up again. You understand what I'm talking about right now? It will not even drop beyond 90.2 etc like that, but you've set it to 19, and immediately it reach 19, the market will be filled for you, and you will just lose everything. Before you open your eyes again, the coin would have pumped and go beyond where you can just join again, because you don't join moving train as a beginner. When they say you should join moving train, it's not in cryptocurrency trading, no. So don't join moving train in cryptocurrency trading. Don't join moving train. Go and join train at the bus stop. If you want to join train in cryptocurrency trading, go to the depot and join the train there. Then you move together. Don't go and join train when it's moving in cryptocurrency. So that's the rule. So having tell you everything about that, now let's go and buy and see how we can buy and do everything. So let's say I go to the market, I want to buy. Let's say I have made my prediction and everything about wing, and right now I want to buy wing. So I will click on wing. So then I will click on buy. Now I will click on this drop down. This is where we have limit, market, stop limit, trailing stop, OCO. This is OCO. We call it one cancel another, one cancel one cancel other. You can call it anything you like. So it gives you so many conditions that even if you know how to set this one cancel one order, you would be able to trade in markets automatically. Like you just set it to a certain point to sell for you. You sell buying point at the same time, you take profit, then you put stop loss at the same time. So that is what OCO cancel can do for you. Trailing to stop, trailing stop, it trail your trading. So if you know how to set it very well, it trail your this thing at a percentage rate. So if your order drop at a certain percent, it's going to stop loss for you. If it increases at a certain percent, it's going to take profit for you. You can stop, you can set trailing stop to, let's say you have 100 BUSD, no, 100 Ethereum in your trading account, and you are trading, you've buy 100 Ethereum, and you can decide to start to set this trailing stop to take profit at every every 10% increment. Let's say Ethereum moved from $2,050 to $2,057, then this order will sell 20% of it for you. You take some profit, right? It continues again. It moves from 2050 to 2100. It will sell another 50% for you. It moves again from 2100 to 2300. It will sell everything. So that is what trading stop can do for you. So for risk management, when it keep dropping, it drops with 5%, it will sell 10% of your total holding. It drops again, it will sell 20% of your total holding. It drops further, it will sell 50% of your total holding. It drops further, it will sell everything, so that it will prevent loss. So that is what trading loss is. Trading stop is, that's what it can do for you. When you study it and understand and know it better, then you are going to be able to use it. So as a beginner in the market, the 2 points in this place, the 2 main thing that is very paramount to you is limit order and market order. So, but this market order is very bad. I won't advise you to use it. This is the problem that is associated with market order. If you use market order, then you are not going to be able to set either buying price or selling price. So you are going to, let's say I want to buy right now. This wing is at 28. Okay, what is the price? What is the market price for this wing right now? So the market price as at this moment is 30.50, right? Let's say I want to use market order to buy this, and I fill everything that I want to buy. Immediately I click on buy wing. This order will just buy it will be filled immediately. It will buy it at the current rate, and we have what we call bouncing in the cryptocurrency market. So immediately you are seeing 30 here. Before you click on buy, the market might just bounce. So this thing will sharply go to 35 or 32 or 31. So immediately sharply go to 31. When you click on buy like this, it will just buy the coin at $31 per one for you. And even the coin, with your prediction, the coin will not even go. Let's say your profit taking point is even 31.5. So you've lost everything at the start. So you haven't started trading when you've lost already. So that's why you shouldn't use market buy order unless you want to just buy and hold for a very long period of time. If you are not doing that, don't do what? Don't use market order. And apart from bouncing related issues, you are going to incur lot of, what should I call it, charges is associated with it. So the ideal one to use right here is limit order. So when you click on limit order, then you are going to be able to set the price. Let's say you've calculate everything and you want to buy wing when it dropped to $20. Then you just click here, then you write $20. Can you see amount? How many wing you want to buy? I am having $70 on my balance. Then I'm going to click on 3.5. That's the amount of wing. It will cost me 70. So immediately I click on buy wing, this order will go to open orders. I hope you understand what I'm talking about. So immediately it reaches open orders, then it's going to wait there till the market reaches $20 per wing. So this works between Mr. A and Mr. B. Immediately someone wants to sell this wing at this particular price, they will merge both of you together, and you will buy, the person will sell. So that's how this market works. So immediately the market dropped down at that present moment and reached $20. Immediately someone is trying to sell his own at $20, you will buy it. So then if order keeps buying and the price keeps moving, that's why. Okay, so let's say you fill this and everything has been filled for you already. If you want to place stop loss, all you have to do is to set another order and set it to, let's say, but this time around you move to sell. This is buy order. I've completed this buy order. It's there already pending. It has not been filled. You move to sell. That's where to use stop loss. When you move to sell, okay, so you can undo $2 loss. You just put 18 here. Once you put 18 here, the amount you want to use, which is 3.5. Can you see? This because I did not buy wing. I'm not having any wing. So immediately I did this. So make sure your buy order has been filled before you put stop loss. So when the buy order has been filled, then you'll be able to put stop loss immediately. I understand. I think you understand what I'm talking about. So then you put this. Can you see? So then you click on sell wing. So immediately the market crashes to what do I call it? What is that ahead to $18 per wing? Then you're going to be able to sell and relax. Maybe you move to another coin, or you still watch that wing to determine another entry point. So that is that about limit order. I think I have shown you how to use limit order to buy, how to use limit order to sell, how to use limit order to do stop loss. So if you are still having anything that is not clear to you on this, you can just drop it for me at the comment section and I will be glad to provide response. So I think I've shown you that. So right now I've shown you how to use everything about that. So I've explained cancel who, market, and limit order. But stop limit, what do you understand by stop limit? So what you should understand by stop limit, when you are trading on Binance, you see this stop limit order. This order will create a certain order that will trigger when a certain price is met. Like when a price on the platform is met, so then this limit order is going to be triggered. Okay, let's say you've recently bought into a cryptocurrency, let's say Fil, Silica, or any other cryptocurrency, and its price goes up by let's say 15 or 20%, and you want to lock in some profit, you want to take some profit, so you can use stop limit order, and you'll be able to take profit at 15%, and when you take profit at 15%, that is 5% less to where you currently at right now. So if the price should fall back below that 15% profit threshold, then your sell limit order will be placed on the order book and trigger to avoid losing more on your profit. I think you understand. Let's say you've incurred 20% profit. That's where you use stop limit. Okay, your profit has reached 20%, and the profit started dropping again. Then before you lose everything, this stop limit will just help you to fill your order book, and you will take, instead of having 20% profit, you will now have 15% profit. I think you understand what I'm talking about. So here, you don't want to lose your profit. It happens at time. I think you understand what I'm talking about. So this is where to find the stop limit. I think I have shown you. So the three parameters you can see here is the stop, which is the price that you want to buy, the limit price, and the amount of token that you want to buy or you want to sell. So it's effective for you to use on sell. That is to stop your loss control or your profit taking. So when we're talking about stop price here, so under the stop price, you will enter price at which you want your limit order to appear on the order book. I think you understand what I'm talking about. If you want to enter this stop price, the price that you will enter at that box is the price that you want your limit order to appear on the order book. So now for this limit price, you will put the price at which you actually want to sell your token. the token that you're having, the actual price you want to sell, that's what you will put on this limit price. So the amount, which is the third boxes, you will enter the number of token that you want to sell. So the stop limit order allows you to have enough flexibility when you are trading. You can use the mechanism to buy, you can use it to sell, but it is more active for selling. So maybe you're waiting for a crypto to break out of a channel. Let's say it's reached a breakout point. So you could just, maybe you are desperate price and you consider it a buying opportunity, and then you can set a buy price at the breakout level. So if the investment trend downward, you can automatically react to it through the stop loss, which we've discussed how you can do that in the previous part of this video. I think you understand what I'm talking about right here. So if you're having any question about this video, you can just drop it in the comment section of this video, and I will be glad to provide response for you as soon as possible. So right now, I've shown you how to buy on the market, the factors to consider when you want to enter the cryptocurrency trading market, and the right time for you to enter the market, the right time for you to leave, and what you need to do, how to buy, how to sell on the crypto market. So that is exactly what we've discussed right in this video. So this is the part for technical analysis. There is another copy trading on Binance. Yes, I will be revealing the secret to copy trading on Binance. In this copy trading, you don't need to do technical analysis, you don't need to do anything. Just understand how to use limit order. Yes, this limit order, understand how to use it very well. Once you understand how to use limit order to buy or sell, then you are going to be able to do copy trading, Binance copy trading, with zero knowledge on technical analysis. Though it's very recommendable, like it's very good, very advisable for you to know at least a little about technical analysis, so that you won't do wrong thing, you won't lose your money anyhow, and at the end of the day, you enter the market with $100 and you leave the market with zero. So that won't happen if you understand little about technical trading. Then you consider using copy trading. So when you are doing copy trading, understanding little about technical trading is what is going to guide you on where you should go and where you should run from when you are trading copy trading on Binance. So in our next video, I will be revealing the basics of copy trading, everything you need to know about copy trading, and how to do copy trading and make profit on Binance without any problem. So right now, I've been able to fulfill my part on how to trade cryptocurrency and make profits with the use of Binance for beginners. So after watching this video, if you still have any question, or there is something that is not clear to you about the video, you can drop your questions in the comment section of this video, and I'll be glad to provide a response for you as soon as possible. Thanks for watching, and do have a wonderful day.